The audit process. The audit process starts from the client acceptance and continuance. This is followed by the establishment of the terms of engagement. After it is the planning of audit, including assessing materiality and risk. The fourth step is to consider internal control, after which the audit of business processes and related accounts follows. And the second to the last step includes the completion of audit, and the final will be the issuance of audit report. First step, client acceptance and continuance. To evaluate a prospective client, the following procedures should be followed. First, obtain and review available financial information. Second, inquire of third parties about any information concerning the integrity of the prospective client and its management. Third, communicate with the predecessor auditor about whether there were any disagreements about accounting principles, audit procedures, or similar significant matters. But take note, the successor auditor should request permission of the prospective client before contacting the predecessor auditor. Fourth, consider whether the prospective client has any circumstances that will require special attention or that may represent unusual business or audit risk. And last, determine if acceptance of the client would violate the Code of Professional Conduct. For client continuance, public accounting firms need to evaluate periodically whether to retain their current clients. This evaluation may take place at or near the completion of an audit or when some significant event occurs. Second step, establish the terms of the engagement. The auditor should establish an understanding with the client regarding the services to be performed. There are generally two pre-planning activities. First, determining the audit engagement team requirements, and second, ensuring the independence of the audit team and audit firm. The engagement partner or manager should ensure that the audit team is composed of team members who have the appropriate audit and industry experience for the engagement. The second issue that needs to be addressed during pre-planning is independence of the team members and the firm from the client. Third step, plan the audit. Proper planning of an audit is important to ensure that the audit is conducted in an effective and efficient manner. The steps taken during this phase include: first, gaining knowledge of the client's business and industry so that the auditor understands events, transactions, and practices that may affect the financial statements. And second, conducting preliminary analytical procedures to identify specific transactions or account balances that should receive special attention because they may contain material misstatements. Fourth step, consider internal control. Internal control is a process affected by an entity's board of directors, management, and other personnel that is designed to provide reasonable assurance regarding the achievement of objectives. The auditor must sufficiently understand the client's internal controls in order to determine which controls exist within the entity. The auditor then evaluates the internal controls in order to assess the risk that they will not prevent or detect a material misstatement in the financial statements. Fifth step, conduct substantive audit procedures. In this phase, the auditor conducts more analytical procedures and examines the details of the account balances. The purpose of such analytical procedures is to determine whether the accounts contain a material misstatement. The auditor will examine other account balances by testing the detailed transactions that make up the balance. On most engagements, this phase comprises most of the time spent on the audit. Sixth step, complete the audit. After the auditor has completed testing the account balances, the sufficiency of the evidence gathered needs to be evaluated. the auditor must have sufficient appropriate audit evidence in order to reach a conclusion on the fairness of the financial statements. In this phase, the auditor also assesses the possibility of contingent liabilities, such as lawsuits, and searches for any events subsequent to the balance sheet date that may impact the financial statements. Issue the report. The final phase in the audit process is choosing the appropriate audit report to issue. When the auditor has gathered sufficient appropriate audit evidence and the financial statements conform to GAAP or the generally accepted accounting principles, the auditor can issue standard unqualified audit report. When sufficient evidence is not gathered or the financial statements are not in accordance with GAAP, the auditor will issue a different type of report. The auditor's report is the main product or output of the audit. This report communicates the auditor's findings to the users of the financial statements. It is the culmination of a process of collecting and evaluating sufficient appropriate evidence concerning the fair presentation of management's assertions in the financial statements.